Thank you, Mr. Chairman. I was listening to Mr. Meek's questions, and I thought he was going to go somewhere else. I'm over here, Mr. Castro. How you doing? He's going to go somewhere else with the Christmas analogy, where stores lower prices to lure more customers in, and it's true. American consumers go and buy more, and then in January they're slapped upside the head with massive credit card bills that they have a really hard time paying back. So they're enticed in with low prices, but then they realize how hard it is to pay back some bad decisions they made in December. I think that is all too good of an analogy that we're talking about today. I want to go back to some of the questions that the chairman asked earlier. You're required by law, you admitted it shall have a 2% capital reserve. You agree with that, right?
Sure.
And you are about a quarter of that now, is that right?
We're at 0.41 in the latest annual report. Sure.
Okay. And is it your testimony today that by lowering your fee by 40%, that is going to allow you to more quickly get into compliance with the law?
My testimony is that this is not going to have a significant impact on the time frame for reaching the 2%.
So decreasing your fees by 40% is not going to have any impact. How do you analyze that? What's your rationale?
We believe that this will not have a significant impact, that we will still be able to get within 2 years to the 2% capital reserve.
I heard you say that, but I'm concerned when you're lowering your fee by 40%, that your testimony is you've done the analysis and you're going to get there about the same time. Yeah. What is the analysis? I don't get that.
It goes to the comments that I made earlier. The only reason that we've strengthened the fund is not due to just an increase in premiums. It is a series of safeguards that we have put in place that have enhanced recoveries, also ensured that the lenders we work with.
No, that's not my question, though. You've said that by lowering the fee, it's not going to affect your ability to get to that point of 2% any quicker. If you've done all those great things, I applaud you for that, your recovery and better underwriting standards. But if then you had the current fee of 1.35 instead of 0.85, you would get there more quickly, because in conjunction of the current fee, not the reduced fee, and all the great reforms that you've had, we would get to 2% far more quickly, right?
I agree with you that we would get to 2% a little bit more quickly, right, but not significantly more quickly than we are on a path to get there now.
But that's our point. You're in violation of the law. You should do everything you can to get into compliance with the law. And reducing those fees at a time when you're not in compliance, for us, really rubs us the wrong way. We don't like it. I'm going to switch gears on you. I've been on this committee for a little over 4 years, and I've heard a lot of my colleagues across the aisle talk about the financial crisis. And they are able to talk about real stories from their communities. Oftentimes they're minority communities who have been hit hard, who have lost their homes, who bought homes they couldn't afford. And now they've lost their home, they've been financially wrecked, and they're out on the street, right? And I just heard you testify that half of the loans you guarantee are African American, and a quarter of them are Hispanic. Is that correct?
No, that of loans to African Americans and of Hispanics, nearly 50% are FHA insured loans.
Is there any correlation between the fact that in the crisis, it's Hispanics and African Americans who you see getting hurt, who we hear about in this committee, but it's the very policies that you're advocating for are getting these same folks into homes they can't afford? You don't see that correlation?
I have a very different perspective on that, Congressman. The FHA for 80 years now has been a part of ensuring that hardworking folks of different backgrounds could access credit responsibly.
And so did FHA avoid the crisis in 08, the financial crisis?
FHA didn't cause the crisis.
I didn't ask
FHA felt the effect.
Of course you did.
Felt the effect.
So in that 80 years, you know how financial crises can affect FHA and can affect home consumers. So we're following up on Mr. Garrett. Low down payments, low credit scores, which concerns us. But the qualified mortgage put out by the CFPB, is that to protect consumers or protect banks?
Answer
the question. Who's it for? Protect consumers or protect banks? QM rule.
My hope is that consumers are effectively protected by measures that are taken
Consumers,
like
yes.
that.
I hope that
Sure.
Mr. Cordray would agree with you that he's trying to protect consumers. I have some disagreements with Mr. Cordray, but on this one, he's saying he's trying to protect consumers and not banks. Why is it good for everybody else to follow the QM rule and protect consumers, but you at FHA, you don't have to follow the same QM rule?
FHA has always had very strong underwriting. FHA is different, markedly different from a lot of the other actors.
Are you committed to following the QM rule now? Yes?
We are committed to ensuring that we enhance our strong underwriting.
I'll take that as a no.
Time of the gentleman has expired.